Hello everyone. So today I was able to grow my account, like made over 8% of my account today. Like look at this equity curve, what it looked like over here. I have a little bit drawdown, goes up, drawdown, goes up, down, some losses, and then look at this skyrocket upward, goes to over 8% of this account today. I mean, what did I do today that goes right, that makes all this happen the way it is? So it all happened that I actually look at this US30 from my daily chart. I try to figure out where is the support and resistance area are. So I did that by, let me bring out the support and resistance level. Okay, so I've already plotted it down so that will not take much of our time. So you can see I have this support and resistance level plotted out, and I don't need to actually put all this on my screen like it's going to be messy. So in order to not really make this bother us much, it's actually an uptrend. We know that is an uptrend, but then look at this. Around this area we started having some downward movement, which is very normal. Then after we see this break above this structure over here, which is normal, it break above it, but then it goes down again. So now it goes above it again, and now it seems to goes down again, goes up. So when it gets to this upside, what I have in mind is that definitely this thing must come down to this area, and I have that area marked out already, so that makes me focus on that part very well. So now I will just hide all those lines so that will not distract us. I first plotted to draw some lines on the daily chart. Also I drag this out on this pattern, this support and the resistance upside. So then I also plotted the level, this key level over here, this key level, so the downside. If I bring out the support and resistance again, you will see that it matched with those levels. Look at this. You can see that this resistance level matched with that key level that I marked out, and also it also goes well with this our trend line that we plotted over here. Like the market rejected from this trend line, it also touched it here, and it got rejected, also touched it again over here, got rejected again. So from this place where it touched it again, that is where I started monitoring the market actually. Then also look over here, look down here, the support level. We have the support level over here, and I plotted the key level also on the downside, and it's also aligned with the support and resistance that I plotted out already. So I'll just take out the support and resistance again. Okay. So now another thing I normally do is that, look at this, I draw this trend line, the trend line got broken over here. And also look at this area, we have a key level over here. If we go down on 4-hour time frame, we see that key level very well on 4-hour time frame. Look at this, the market keep bouncing away from it. Look at all that. So this key level, I mark it out. I even plotted an alert on that key level. You can see that, so that whenever the market get there again, I want to know. So then after plotting that out, what I then do is that I did not enter trade with this, but then I tried to catch all this move, but I wasn't able to really catch it like that. On a normal ground, what I would have done in this kind of situation is that when the market break this trend line like this downward, I will wait for the market to go back to this key level and then catch this move, which is about US30 count in a point. That is about 195,700 points, which is about 1952 pips. I will have catched that, but I wasn't able to make that move, so that one I've gone. But then now what I did again is that, let me take that off. So what I did again is that I try to find another one on the 4-hour time frame. We see that what is going on the bigger time frame, which is daily chart, supposed to at least maybe goes down a little bit. I don't know, maybe it's to get down here or not, but what I care about is that what I'm seeing in front of me right now, that's what I really care about to trade with. Then look at this. So I hide that and then plotted another one on 4 hours time frame. So what I did is that I plotted another key level also on 4-hour time frame. Like this is what happened on the daily chart before. Let me bring that out again. Yeah, this is what happened on the daily chart. Okay, sorry, over here. So this is the daily chart one that goes down, the market retreats back up, and then tested this key level, which align with the support and resistance, not supply and demand, support and resistance. But also if you are a supply and demand trader, also you know that there's some kind of mitigation over here. There's some kind of mitigation over here, but we are not talking about supply and demand today. So you can see it also align with our support and resistance. So I will hide that support and resistance again. So the daily chart also, so these are our key level. It goes back to go and retested that key level, and then from there what we have is that the market start rejecting, and look at this, it goes down below this. Going back up again must come down probably below this again to prove that this market is actually going down. But how far can it go down? We don't really care, we just want to make money. So I'll hide all those daily something, then come back to this 4-hour time frame, which we really care about, to see where we actually started running this thing from. I draw the key level first, so the market retraced back up to the key level on the daily time frame, but then from there I plot this trend line. Then after plotting the trend line, also we see that we have a break from the trend line downward, and look at this, we have a key level. The market break the key level upside to retest this one up here instead of this one down here. I mean, instead of it goes down, go back up here, and then, but look at what happened. It slide through it. It doesn't really stay there. It doesn't really stay on that key level. It slide through it and come up here to touch up here, which makes this up here more important than this one down here. Then what we did again is that I monitor what is going to happen. Probably maybe it's going to just break this trend line upside and then continue going up. I actually draw a trend line on this area before trying to see what is going to happen, and then it doesn't close above it, it goes down below it again, which make this over here liquidity grab. So it goes up to retest it, but then it's supposed to be going down from here. But look at what happened. So there's news yesterday, so the news, FOMC whatever, I don't know. So the news was what happened that actually caused the liquidity grab. So it goes up and immediately flashed down again. So in this flash down, let me show you something now. Let me just hide this 4 hours and then bring up the 15-minute analysis, or I should just leave the two. This is not complicated, seriously, this is not complicated. Let me show you again what I'm doing, so you can see that. Let me hide the 15 minutes again and then bring it back so that you can understand what I'm doing. So look at this, we have a break of this trend line downward to this side. And where do we bring this level from? Look at this, we bring it from the history. The market is actually have something to do with this area. We bring it from the history. The market get to that point, reverse back upside to retest this point, but then it's supposed to be coming down, which is normal. When it's coming down, this point will be my first take profit area, but then it doesn't just goes down easily. It first of all grab liquidity, but then the market goes up and grab the liquidity. Anybody that is setting stop loss above this point, their stop loss is gone with this flash upside. Then what happens next? It goes down, flash down, and eat this, the normal place I will put my take profit if I'm in a trade with this side. But that move was so fast, it goes down, up, down. I hate trading news. So then after that, it goes up again and retests that point. I actually thought it's going to continue going down from that point, but then waking up this morning, I realized that the market have already go back up to retest this point. What I did is that immediately when it gets to that point, I goes down to 15 minutes. I plotted another trend line again. The same pattern on daily charts, 4 hours and 15 minutes time frame. I couldn't expect this to be this easy. Monitor this chart 7 days, 16 hours, and I made over $800 from it. I believe with this kind of thing, if I have more bigger portfolio than this that I have presently, I'll probably do more than that. Okay, so now on 15 minutes, looking at that 4 hours, after checking the 4 hours and all what's happened on that 4 hours, I plotted this again on 15 minutes, like the trend line again on 15 minutes. At first I was trying to skew this trend line from here, dragging it around, you know, trying to put it here using this area, but you have to keep evolving with the market. So I drag it up to this level, and then this is where I think is the proper place to put it. Immediately when we see a break from here, look what's happened. The market have not come back to that point again. And also, if we use this 4 hour time frame to also find a key level, this is what we will have on the 4 hours. on the 15 minutes, sorry, if we use the 15 minutes to find a key level, this is what we have. And look what happened. The market don't break away from the key level until when we have liquidity grab over here, which is the nails. It was nails that caused this move. So I will remove that, but then we also draw our key level using this point, this area, and this area, which is the break of the trend line that we have. I use that. So now what I need to happen is that I need this candle to just close below this key level. When it close below the key level, what I want to do is that I want to short it to the next key level. But look what happened. The market, when the news started, the thing just flashed up. It goes up, goes down again. Like when it goes down, goes up there, goes down here, it gives me a sign that there's another key level over here also, which is where the market respects. I actually look back to the history. I try to put it down here, like okay, maybe this is where it is, but then I look back to the history. I couldn't see anything around this area. I was like, no, I'm not going to choose this. I will just choose this area. Perfect, like this area. So with that, at least if it doesn't get down here, it will probably get to this level. So that's why I plotted this level out. And what happened, what do we see is that the market, all this flash up, flash down, it used this key level as a playing ground for its move. Then what happened next is that it goes back up, goes down, and go back up to the previous key level, which we have been looking for from this level, from this area, which is where we have the break of the structure, break of the trend line. When I have the break of the trend line, I know something is going right. And look at this. If you are a supply and demand trader or ICT trading or whatever, you will also notice that we have a break of structure over here, we have another break of structure over here. So if this goes up again, we must have another break of structure. That is exactly what I did, and I just want this to come down to this level, but I've already closed the trade. Actually, when it gets to this, around this area, I close the trade. I enter one, I enter again, I enter one, I enter again. So, and I'm done for the day. When it goes back up to this key level again, that's where I place my trade, and I aggressively short it. I actually placed like 3 trades. The 3 trade go back up and hit my stop loss, take me out. I enter again with just one trade. Again, my going back, I enter with 1 trade, and I put some more percentage into the trade than just the trying to pieces my trade in 3 places or whatever. So I enter the trade up here, and then everything just fly down. Now how come I put more percentage on my trade instead of doing it the proper way, which is entering small, those things? So what really happened is that going down to 5-minute time frame, the same thing that happened that we've been monitoring happen again here. Trend line again, and then key level. Look at that, key level. Look at that, trend line again. The market get to the key level on 5 minutes. We've been coming from daily chart. We see the same thing on daily chart. We see the same thing on 4 hours time frame, on 15 minutes, now on 5-minute time frame also. The market break the trend line, we have a key level, the market break the key level, go back to retest it. I enter the trade, I set my stop loss above it, and I short it. Like this is my first take profit side. I even forget to look at this. I just know that if it coming back down, it will probably get to this neck of this level, or it will deep dive into it and break it below. Then when it break it below, we'll be looking for where it's going to stop. So I know that probably it will go down here to stop, or come to this actual level to stop, but I don't really care. I don't want it to get there before I close my trade. So immediately when it gets down a little bit below it, I think around this area, close the trade. And look at what the equity curve look like. So beautiful. Maybe I will just stop trading for this week. For this week, wait till next week, or maybe I'll just take a few more trade. I don't know. Yeah, but look at this equity curve. So all this is not really matter. This is what really matter to me much. Look at this. I have a drawdown, some loss up, some loss up again, loss a little bit, and look at this flash upside. This is very nice. So it's just a pattern. Like the market keep doing that. I don't know why it keep doing that. I don't know why. So that's just it. Thank you for joining me today. I really appreciate you guys. So if you like what you just seen, what you just watched and listened to, smash the like button and subscribe to this channel. Thank you guys, and bye for now.